China does face challenges. The property sector continues to correct. But here's the critical insight. It's becoming increasingly irrelevant to the China investment story. Chinese equities have rallied 20% in 2024 and 34% as of end September 2025. Smart investors have identified and acted on what could be one of the most significant investment opportunities in the last few years. Why? Three powerful structural drivers are reshaping Chinese markets. First, the Chinese government has made economic growth and equity market stability a top priority since September 24 last year. They have cut interest rates, reduced bank reserve requirements, and created liquidity backstops for the stock market. Second, with government bond yields at just 1.9% and property no longer attractive, Chinese households have the potential to shift trillions from real estate and cash into equities. Only 11 of Chinese household assets are in equities compared to 32% in the US. That gap represents enormous growth potential. Third, China has the fiscal firepower ready to deploy if trade tensions escalate. They are not reacting to the latest noise around trade negotiations, but are more strategically positioned to support the economy if economic data weakens. We would like to share our thoughts on 5 investment themes. Artificial intelligence. Taiwan and China dominate the AI supply chain. TSMC manufactures the world's most advanced chips with customers like Nvidia and Apple. We are also positioned in AI component makers in cooling, power solutions, and networking, and looking at companies benefiting from the massive infrastructure build-out. Chinese intellectual property. Chinese intellectual property such as Labubus are expanding rapidly in global markets. China is also a major player in the global mobile gaming market, creating successful titles such as PUBG Mobile and Genshin Impact. In the years to come, we believe that Chinese companies will continue to create Chinese intellectual property with increasing global appeal. Electrical vehicles and autonomous driving. China has 50% EV penetration, the highest globally. China is dominant in the LiDAR market, which is essential for self-driving technology by creating high-resolution maps. Chinese LiDAR manufacturers are driving costs of LiDARs from $20,000 to $200 per unit, enabling mass adoption. Humanoid robots. With aging population and labor shortages, the humanoid robot market could reach 1.4 to 1.7 trillion by 2050. The humanoid robot supply chain will be predominantly Greater China-based. Industrial capabilities. Chinese construction machineries, batteries, and energy storage systems are also steadily gaining global market share with superior technology at competitive prices. Napoleon Bonaparte once said this 2 centuries ago. China is a sleeping dragon. Let him sleep, for if he wakes, he will shake the world. That dragon is now awake. Global investors are still underweight Chinese equities. They hold just 8.9% compared to 10.5% benchmark weight. But this positioning gap is closing. The opportunity isn't without risk, but with government support, improving fundamentals, and world-leading companies in transformative sectors, Chinese equities deserve serious consideration in diversified portfolios. Thank you for your attention.